Maybe I'll wait like 10 seconds before we go live so I can get this link. We should be live in just a couple seconds here. And we are. All right. Okay, and we're live. What's going on, everybody? Welcome back to Wolf. It's great to see you all here. Excited to be chatting here with Mr. Thomas as we do each week and talk about all the things that are going on, man. A lot of things going on. We had NVIDIA earnings that just went down. NVIDIA did really well. People are very happy. There's a lot of anxiety kind of leading into earnings. People were like, okay, can the game continue on? Is the music going to keep playing? Are we going to get some kind of big, I don't know, left field, random, like screwball kind of thing? Like, what's it going to be like? We ended up having good result there. So we'll talk about that a little bit. We have some AI discussion coming up in this talk as well. And definitely want to talk a little bit on Bitcoin, on Jane Street. We had some crazy stuff come out this last week. A bunch of chatter on Bitcoin Twitter and crypto Twitter with Jane Street coming out and a big lawsuit, essentially. Apparently, they're the reason everyone lost their bags in Terra Luna. And so we're going to talk about that as well. So, Mr. Thomas, how are you, man?
Yeah, I'm doing good, Kate. It's good to be here with you another week. A lot of interesting stuff. It's interesting to see. We just had the NVIDIA earnings. This Jane Street story, very, I would say for me, amusing. I think it's people are getting kind of excited about like a lot of not much, but we can talk about that too. But yeah, man, there's a lot going on. So yeah, good to be here.
Yeah, 1,000%. And let me pull it up for people who missed it or just want to have a little bit of visual to see kind of what went down here. NVIDIA just reported their Q4 earnings revenue. Actually, let me pull up. We had Evan's updated one as well that he posted. Here it is. So yeah, beating expectations of $1.50 with $1.62 revenue, 68.1 billion, which beat their expected at 65.9 billion. So just a few $1 billion extra.
And look, I mean, this is like so much of the market. Well, it's fascinating, isn't it? Because the market is like so dependent on this, but equally,
I know
the market is like trying to just thread the needle here. Or it's like, okay, if AI is too good, we're going to crash. But if AI is not good enough, we're also going to crash because we're going to thread this needle here. We have to justify all this CapEx spend. So we need NVIDIA to hold up. The last thing any of us needs is NVIDIA to nuke because actually, its clients will stop wanting its GPUs and all that. That would be a disaster for the market. On the other hand, we get this global intelligence crisis, prediction from Citrini, which we can talk about as well. So we're trying to thread the needle here. We want AI to be good, really good, not too good, so we don't all lose our jobs. Exactly. So that's 2026 in a nutshell. But I don't think, it's interesting to me. I know that it was slightly ahead of these earnings were slightly above expectations, but the market had broadly priced it in, right? So it's not like the stock went bonkers after the announcement. It was like, oh yeah, great job, NVIDIA. It's slightly better than we expected. I mean, there's probably more stuff in the details. We have to dig in. Like, are there, what's happening to accounts receivables? Is that growing? Is that shrinking? All these kind of it's hard also just on the. This is why you got to be a real expert to really dig into the accounting for this kind of stuff to get under the hood. I mean, obviously anyone can see. Sounds good when we've got these headline numbers growing in net income, growing like EBITDA. That's all great, and it's so wildly insane that they're operating at a 75% gross margin. Like what an insane business that they've built, and it's become the best business in the world. And I guess that shows you like what happens when you're ahead of everybody else, right? He's working on this before anybody else even, but when it's just sci-fi for everybody else, they're actually investing in this stuff. And I mean, there's always also a little luck if you look back at the NVIDIA history, just in terms of like, it's not like they were planning on transformers and the large language models coming around, in the last few years. This is, right place, right time stuff for them. But it just incredible business, and they're providing what the world needs, right? So, and doing it at scale. So
they're moving, they're chugging along, dude. Like, they're truly chugging along. And you're right, there was a bunch riding on this. Like, I'm not sure what would happen. Like, if it's almost like you mentioned, it's almost priced in regardless of the impact. Like, you'll formulate the thesis after you find out, but the price, it's almost priced in anyway. In fact, let me see if I can pull it up here. I want to look at the direct response here. I'll pull this up. The NVIDIA chart currently down 0.25% in the after hours, but definitely did have an initial rip up here. And honestly, I mean, you're looking at up 4% last week. People were very excited, kind of leading up, and 7% in the last quarter. Oh, by the way, actually, there is a pretty interesting ETF we are working with Leverage Shares. By the way, big shout out to Leverage Shares for sponsoring the show. But I was going to say, this is a 2x long NVIDIA daily ETF for those who are trading. Obviously, if NVIDIA is doing well, the 2x long is going to be doing even better. And so really interesting stuff across the board. If you are trading out there and you're looking to get into these plays, there are all sorts of opportunities. There's a bull run everywhere if you're looking. Again, big shout out to Leverage Shares for sponsoring the show today. Ton of stuff on their site, by the way, if you guys want to check them out. I do want to say this because, anytime you're working with ETFs and funds like that, it is important you guys carefully consider the fund's investment objective, risks, charges, and expenses before investing. Their prospectus and summary prospectus contains this and other information about Leverage Shares. And if you want to obtain that prospectus and the summary prospectus, visit their site at leverageshares.com. That link is going to be down below in the X stream. It's going to be the tweet below it. And if you're on YouTube, it'll be in the description. Their funds prospectus and summary prospectus should be read very carefully before you invest. Super excited to be working with Leverage Shares for this one. And they've got a ton of stuff going. But yeah, I mean, NVIDIA doing really well in the last few years. You're going to have have a good time as well.
I was going to say, this one's a bit of a tease. If you think if you long this 2x long Leverage Shares ETF, you're thinking, you get that after hours pump after the earnings. Look, you're thinking if they get a big outperformance on the earnings, it's really going to pop. Yeah. And then the fact that it pulled back is quite interesting. I wonder what the cause of that was. Like, you got the spike up, and as we said just a moment ago, you get the spike up because headline numbers are awesome.
Yeah.
But that's when you get people are going to dig into the accounting and actually figure out, like, the thing about the headline numbers is they are a little bit manipulatable. Not in the sense of, like, you can't just create a company and make 60 billion in a quarter, right? I'm not saying that, but they can pull forward stuff from one quarter to the next. You can kind of massage the numbers. I'm not saying that's what NVIDIA have done here, but it's the kind of thing where that's the kind of stuff where you can get a spike up and then kind of people start look into the details further and go, well, actually, this thing here is, maybe inventory's rising. Maybe there are some, like, subtle things happening behind the scenes that kind of make it go, oh yeah, it's bullish, but it's not as bullish. Also, the other thing right now is how much is NVIDIA sort of priced to perfection. I mean, it's a tricky thing with investing, right? Because we know NVIDIA is this god tier company, but it's also priced like a god tier company, right? So it becomes like, we know they're going to be the driving of the AI revolution, and we know that they're going to make a metric ton of money doing that. And that doesn't, but the question is, are they good investment at today's price? And that's where you have to be going on, like, a second order, third order, where you're going. It's not just about. It's like, what do you think relative to the market expectations? It's in the same way that you can have a company like, for example, there are these software companies out there that are just being torched right now because the expectations of the market are that these Claude Code or any of these LLMs is going to come in and basically enable businesses to kind of replace these services themselves, like ad hoc. I'll just build me this app for me. I don't need to do that. Like use your service. And the thing is that in a lot of these cases, well, in some of them anyway, you're going to have these interesting dynamics where there's a tension between the value and growth of these software companies. Might be making a ton of money in, like, everyone might be right. It's just a question of the price. So you might have a situation where, like, a company is so profitable right now, but they also are going to be dead in a few years' time. And then it's like, how do you factor that into the? You have to look at, like, what are their cash flows going to be for the next few years, and so that's where it kind of creates this interesting dynamic where it's not just like, it's not just, you can't just go at first order, like, oh, look, AI is bad for things, or AI is great for NVIDIA. Like, yeah, that's true, but you're not going to get alpha investing with that kind of logic. You need to be looking at, like, second order, third order, fourth order. But it certainly is this situation where it's a great unknown. We were talking earlier, and I reckon pull it up because it was such a viral article. This
pull that up.
This, like, meme storm of fear of this Citrini article. Basically, it was playing. The headline is 2028 Global Intelligence Crisis, and they picked. And even if you just go off the headline, right? They did that very specifically, like picked why 28 and not 29, or why, because they were playing off the 2008 global financial crisis. And then they created this fictional narrative about what the next couple of years are going to be like, or what could be like. And it's extremely interesting reading because I mean, well, first of all, the first line is, this isn't bear porn. Well, it is bear porn, right? It's exactly bear porn, but it's interesting bear porn. And what it does is it creates this scenario laying out how everybody right now is thinking, like, you don't get real bonus points right now for thinking AI is bad for software. Everybody's kind of figured that out at this point. But this article is going, what if AI is bad for, and it starts to connect it to a whole bunch of other industries that might be affected, that are like second order, third order effect stuff, like essentially laying out this idea that, hey, you're going to get this feedback loop where companies are being, they are forced to invest more in AI because it's the only thing that's actually, like, it's extremely efficient, and they're replacing people, they're replacing labor with AI, and it's increasing investment in AI, but it's causing, and they don't need people to do this. So you get a massive hit to the labor market. And what it lays out is this idea that it creates this feedback cycle where you get massive unemployment that comes from it. And of course, if people are unemployed, they stop spending money, right? Exactly. And the AI agents, the AI servers are not going to, there's no discretionary spending from the AI.
And that feedback loop will just continue to spin in circles. Like, we'll never get out.
Exactly, right. They're not going to be, they're not doing the discretionary spending. They're not buying, like, they're not going to Vegas for the parties. They're not, the AI isn't watching movies, isn't doing consumption. So it lays out this whole narrative that this global abundance of intelligence actually creates a situation in which there's a massive reduction in aggregate demand. And you have this kind of feedback loop where businesses are actually struggling because they're getting, like, essentially less demand for their product, but the only thing they can do is be more efficient, which means investing more into AI, because that actually is efficient for them. So they fire their workers, invest in AI. The people are their workers, so the people stop buying their stuff. So they keep following this cycle, and it starts to. And the article lays out these kind of interesting companies that you wouldn't necessarily think are going to be hit by AI, but it has like ideas about like Visa and sort of different models where, okay, there's less spending and the AIs are going to be targeting friction in the economy, and the AIs are going to be going, hey, we can help you save money in this area and in this area and this area.
Mm-hmm.
And it does create this, it's an interesting idea, I guess, this what if, right? What if it leads to this disaster? But also, I think it tells you a little bit about the market. Like, it's an interesting piece. It's not actually, I didn't think it was as good a piece or as strong a research. Like, it's easier to rebut a whole bunch of these points, but it went so viral, and I think that gets to the heart of like what the zeitgeist is right now. If you think about what's happening on X at the moment, and also like X is just like a reflection of the way people feel. There's this massive uncertainty that comes from, we have this new technology that's coming in, and it's like, oh, it's going to take our jobs, oh, it's going to cause a crisis, oh, it's going to do all this stuff, and people are, it's easy to get, it's just easy to get, I guess, relatively viral going with either a in this case it's bear porn. And I will tell you that it's also, it reminds me a lot, I don't know if you remember this, but it's kind of the bearish version of what do you remember the poster was insanely popular 5 years ago, it's still around today, but Plan B in Bitcoin? He did the stock to flow model.
Yep.
I bring him up because he has a particular style of posting about Bitcoin where he likes to create these kind of like these bullish narratives, like what if, and you go, oh, the institutions come in here, the endowments come in here, and then Bitcoin hits 120K, and that's when, you know, the central banks come in here, and it creates, you create a story, and it's like, that's a bull porn essentially, but it's very exciting. It's like, oh, what, you know, once you create, you can imagine this story in your head, and it does tend to go viral on Twitter because people enjoy a good story. And this is kind of the opposite of that, where it's like, if you can create a story and go into real detail, I mean, you go look at the granted, like amusingly enough, obviously they produce this with AI, but they go, you know, you can create kind of a false sense of credibility when you create like a story, but then you go into great detail, like get real granular, like look at how we're going to use stable coins to cut fees. Never mind the fact that the actual adoption of things is like, when do you use stable coins in your day-to-day life? Like it's not, it's so, you know, this is a story we've been hearing for 5 years, but suddenly the AI is going to be doing that. It's going to kill Visa. But what's interesting is that the market reacted, right? Like this article came out, and then the next day, like a lot of the stocks in this article, they tanked in the market, and that can't be a coincidence. I do not think it is. So it does tell you that, like, you know, whoever controls the memes controls the market, so to speak, which I think is an extremely interesting, and tells you maybe about where things are going, or at least where it has been in the past. I know in the context, I'll be curious to hear what you think about this, Kay, but don't you think it's interesting how Bitcoin's memeability has drastically reduced, I would say, on X over the last 12 months? And it does, and maybe even longer, and it doesn't have, and the performance isn't there as well. Yeah. I mean, if you think about
today had some decent movement, but if you zoom out, it's not so good.
Yeah, today had a pop, which is cool. But if you think about where the memes that existed in Bitcoin during the COVID crisis, it was an insane time Like the timeline was, the Twitter timeline was popping. It was an insane period of time. Nowadays, you just don't see, it doesn't have that, we don't see that kind of memeability of it right now. And that might come back, but equally, that is interesting how there's this huge correlation between, the memeability of an idea and then also what we see in the markets. And I think it makes sense because Twitter itself is a market in its own way. It's not a price market. Like, it's not a market for selling goods, but it's a market for exchanging ideas. And it's like the ability to market your idea. It's similar to financial markets in its own way. And I think that's really interesting that we see, this article that comes up, which is essentially some fear porn, some bear porn. There's no real basis for a lot of this stuff. It's actually like plenty of people have come out and said, even the underlying economics don't really, like, some of their core assumptions don't really make sense because, in order to get this AI revolution, you need massive investment, which is going to treat and just on an identity basis, it's going to increase the incomes in the economy, and people own the assets. And so you can't have this. They're basically disputing even the premise of the article that it's even possible to have this kind of enormous increasing income and at the same time depression in aggregate demand.
Yeah.
But at the same time, just a very memeable article, and it really resonated with people. So I do think, like, whoever controls the memes controls the, has the power at least, or at least it looks that way, right? It's very interesting, isn't it?
Yeah, I will say, I mean, for Bitcoin, man, we had a bunch of really powerful narratives that were really holding up well on the uptrend. I mean, when Bitcoin's up, dude, like, anything sounds good. And you're able to sort of attribute reasoning to basically every single price movement. You go from here to here, and you're like, it's because the banks, dude, they get it. They like the ETFs last month. They're like it. And then you go back direction, you're like, wait a minute, maybe it was the ETFs. Like, it's actually like a pretty flawless transition, or not transition, but like an extra thing to throw in there. There was an article by this dude, Justin Betchler. He's talking about, the 21 million cap might be functionally irrelevant because of Jane Street, and we'll talk about Jane Street here in a second. But they have essentially like an unlimited derivatives market, right? Just like there is in the paper Bitcoin world, where you're able to hedge, essentially infinite hedging, which puts the 21 million hard cap of Bitcoin in a tough position. And he had a really interesting article, like a bunch of points in there, like if they have, hundreds of $1 million of long positions in IBITs, and you're bringing these ETFs in, but then you're able to create a phantom supply because of all your derivatives. Like, does it even matter? Bitcoin should be higher, but it's not. And, the Bitcoin ETFs aren't really bringing institutions to Bitcoin. They're just bringing the enemies of Bitcoin into the ETFs. And so it sparked this whole debate around, like, what actually matters. For me, it's tough because, like, without people get really mad at the fact that these institutions have entered Bitcoin and stuff. And it's tough because, like, on some level, I guess I'm torn because he was saying that, without it, maybe without this price suppression, in quotes, Bitcoin would be higher. And I'm like, would it be higher? Like, I'm pretty sure the ETFs are what got us from 50 and bounced us all the way to the hundreds. It's really tough because you don't know what happened and why. But that's a great point there on that article, on that previous article.
Yeah, I mean, look. The thing about it is that when you're running a naked short, which I'm not even sure that he's arguing they are running a naked short, but when you're running a naked short, you're borrowing Bitcoin you don't have and selling it. And so this idea that, you can theoretically borrow an infinite amount of Bitcoin and then sell it, and like, it doesn't hold up. It's a lot, in my opinion, like, we are witnessing levels of cope maybe not seen in a few years, like tremendous levels of cope. The article starts with, we should be at $150,000, which is like Where did that number come from? Why not?
I mean, it's a
200,000?
fire marketing line that's going to get people to read.
Yeah, but like if you're gonna pick a number out, like why should it be at 150? Why not? Oh, Bitcoin should be at 200,000 right now. Bitcoin should be at 300. You know, like Bitcoin could be. You could just say any number, and he's got this idea that, you know, people are shorting it, and so it's like something is wrong. But actually, that's how markets work, and it's interesting. It reminds me a lot. Like, this is just what happens in a bear market. You know, the gold guys. It's funny. Gold's been on this incredible tear, gold and silver, and it's like a huge bull market for them.
Yep.
You know, great for the gold bugs. But we had to listen to, for years and years and years, all of this idea that that market was being suppressed by paper.
Yep.
Like that market was being suppressed, but, you know, actually we're being held down. We really should be higher, but, you know, the evil manipulators are holding us back. And then, you know, suddenly the price is pumped, and it's like, oh, forget all that crap. Like, you know, so it's like, basically what happens is when the price is down, which happens in the market, you know, and if you're long Bitcoin or you're long gold at the time, it sucks.
Yep.
And it's like, why is this happening? And you come up with these, it must be this like evil Jane Street. They're the ones responsible. And, you know, like it reminds me a lot of the like the Seymour Skinner meme. It's like, you know, could I have been wrong about Bitcoin? No, it must be Jane Street.
Must be Jane Street.
like
oh.
No.
By the way, are you caught up on everything that happened with Jane Street, like this whole lawsuit and stuff like that? Have you been caught up on all that stuff that's been going on?
Yeah, I know. Look, I know they're being blamed for the dump that happened for Terra Luna, but also, like, that thing was a Ponzi scheme. It was designed to, like, it was going to, you know, the thing is that they just made money off it. Like, the thing is that they just figured out what was happening and shorted it and made profits off it. You know, I have no doubt that Jane Street are have been shorting Bitcoin because they're smart, and they tend to suss this stuff out. You know, they do. Like, I don't doubt that Jane Street have been dumping Bitcoin over the last 6 months. I mean, we know that the price is down, but the idea that they're solely responsible is, well, first of all, it's not true. But then also, if it is true, it kind of defies the like how bullish were you really on the asset if you think one hedge fund can just take it out completely? Like, I don't believe that. I don't believe it's true. I don't believe they're responsible on the upside or the downside. You know, they're one actor taking a position. Maybe they're making some money off a short position. Good for them. They'll get, you know, they'll certainly get their face ripped off in a pump situation, which happens a lot too, right? It's not like, you know, if Jane Street is short, then I bet you they didn't enjoy the last 24 hours when Bitcoin did have a pump. So that's just the markets. Like, you know, good luck to them if they want to take a short position. It's a very dangerous position to take with Bitcoin because it's volatile and tends to go up. You know, number go up in general, right? So very dangerous position to take to short Bitcoin. You know, if they've been successful, I say good for them. But, you know, Justin has a habit of coming up with a lot of conspiratorial takes on, you know, if it's not Jane Street, it's Coinbase. If it's not Coinbase, it's, you know, David Bailey somehow, whatever.
Like this tweet right here, Benjamin Cohen. This is, I think, directly related to all the stuff going on. Bitcoin price action is not a manipulated conspiracy. It literally is just pumped in early March every single midterm year. Every cycle is the narrative to support it. Then by April, everyone forgot, and narrative follows the price. The last line especially, I agree with. I mean, narrative always follows the price, dude, every single time. Because the second the price goes the other direction, that narrative, get it out the window. It's out of here. Like, and it took me a while. Like, I had to learn in real time. because I'm hosting Bitcoin spaces. I'm learning about it. I got guys coming in who've been around for 40, 50 years, been gold bugs for years. And I'm like, shoot, these guys got to know. And they do know. They're really smart guys. They're made a lot more money than me. But in this scenario, dude, I mean, I watched it happen and play out right in front of me. The narratives fell away in the second Bitcoin dropped 1020 and then held these lower prices. And all this talk just kind of faded of what Bitcoin was going to do. And it started to turn into this shouting match at each other. And now we're just sitting here 50% off the highs. And now now the conversation is, hey, maybe Bitcoin doesn't make a new all-time high. Hey, maybe Bitcoin's had a good 20 years. I mean, we've never seen an asset like this really do 30 years. And I'm like, oh my God, like now we're going down for the next 10 years. Like I thought we were supposed to go to $1 million. Like I thought we had a Bitcoin precedent.
Yeah. Look, I do think Benjamin is, I mean, I like, a couple of things I really like about him is he's unemotional, tries to present the data, and isn't necessarily being like I don't, he in this case, I completely agree that narrative follows price. I think Benjamin sometimes, I don't necessarily agree with everything he says, or in the sense of, he's brought up the idea that Bitcoin has pumped. I guess he's confusing has pumped with does pump every March midterm year, because he's bringing up, hey, Bitcoin did well, price action in March of 22, 18, and 14 potentially. But we got 3, like that's the sample of 3. So I can't, where I would kind of, I guess, disagree with the man is going, it doesn't mean, like, we don't know what's going to happen next month. It might go up, might go down. But what happened in March 2022 doesn't determine what happens in March 2026. It's kind of an absurd position to take, realistically. I don't know that that's what he thinks, although it kind of seems like that from that
just
tweet.
Following it until it breaks. Like, he's like, I think he's just like, look, this is what it's always done. Doesn't mean it has to happen, but until it changes, like I'm just going to assume that it's going to continuing on.
Yeah, and to be fair, it worked really well in terms of like just calling like, hey, look, November's the top last year because of this historical cycle stuff. Like, yeah, actually that worked really well. But equally, I don't know. It's like, is that a coincidence or not? Because then you also have to explain why it's like, okay, I mean, that kind of theory of the market assumes Bitcoin is driving everything, right? Because, you've got these software stocks that are new, Bitcoin is correlated with software, and these software stocks are nuking because AI is potentially killing their business model.
Yep.
But are we really going to go, oh yeah, the Bitcoin cycle, the Bitcoin halving cycle, that's the reason why, Adobe is down 40% from its all-time highs in the last, like, it doesn't follow a logic. The idea that, AI is somehow like, it assumes this kind of connection that there's no logical connection between the two of them. It's just a pure coincidence. But I happen to agree with him that there might be, there is a narrative that follows price. I mean, there's no question about that. And so when Bitcoin is down, who's to blame? And when Bitcoin is up, it's, well, why are we going higher? And it's because, as you mentioned, we're going to get all this kind of stuff, and people can kind of construct their own narratives. I actually do think there's a reasonable chance of that Bitcoin will do well in March anyway. And it's just to kind of, I mean, it doesn't take it's just mean reversion is a typical thing that happens in markets. Like, Bitcoin has had a really bad several month period, and at some point it's going to bounce off those lows. That typically is how this thing happens. I mean, the question is, of course, as well, where's the long run trend? And it's interesting to follow some of these guys who tend to think that there might be look, there might be further lows to hit. The one thing we know with Bitcoin is it does tend to trend really hard. Like, it's quite interesting as a, if you just look at from where it bottomed in 22 to peaked in 25, that's a 3-year uptrend. Like, that's a secular rise of 3 years from late 22 to so November 22 to 25. It was just going up continually for 3 years. And you don't tend to have bear markets that go down for 3 years, but they can be these periods where it's like it lasts significant. It's not uncommon or unheard of in Bitcoin to have an 18-month bear market, right? It's happened several times before. Yeah, I mean, look, some of us are calling for, I just saw a comment here calling for like bouncing off the, what was that, 50-month? Is that the idea? But like a 57K target. I mean, yeah, look, I don't think that's completely unreasonable. I tend to think my best guess is that it doesn't bounce. Wherever we end up, my best guess is that, look at historically speaking, you get a lot of chop at the end of a bear market. It's not a bear market is not the inverse of a bull market. In a bull market, you get a blow off top. You get absolute euphoria at the top, and then it's over. In a bear market, at the bottom, it's not like euphoria for the bears and then they all get wrecked and it goes up. Actually, what tends to happen is you hit a bottom and then you just move sideways and you just get bored to death. And everybody's forgotten about it. Nobody wants to talk about it. It's over. It goes like that. Bitcoin hit 17K in July of 2022. And then, we were at 17K in December of 2022. And yeah, there was some bouncing around that period, but essentially that was 6 months of kind of nothing.
Yep.
And then, yes, we had a restart of the bull market. So I don't know where it's going to bottom, but I don't see a kind of V-shaped recovery coming, which we did see if you go back and look at April last year, right? We had that kind of the tariff stuff happening, and we had it was just a V-shape. I would be shocked if it played out that way. And obviously, like, the one thing that Bitcoin does do is it surprises people. So you can't know for sure. But yes, accumulation summer 2026. I agree. And like, if you're a Bitcoin bull, it's like, great. Like, this is a downward difficulty adjustment, stack and sats. Like, that's the idea,
I'd be so down, dude. I'd be so down. Even those lower prices, I'm like, dude, I'll take a loan. Like, do not, like, if we get real low, dude, I will consider, doing all that I can to get as much Bitcoin as I can if we drop down pretty low here.
It's an opportunity. It's an opportunity to accumulate some Bitcoin. And, truthfully, well, look, people will disagree in this, but I kind of think the opportunity to make serious money happens in the bear markets, and the opportunity to lose serious money happens in the bull markets.
Yes, so true.
That's where, like, in the bull markets is what the big mistakes you can make is putting on leverage or or getting just too excited about the new exciting innovation, like Bitcoin treasury companies, or prior cycles, like, oh, I'm excited about, if you were into crypto when you went into any of the other promises that didn't deliver. But it's in the bear market where you really focus and you go, I know, like, what's going to survive this in 3 years, 4 years, 5 years time, and Bitcoin is. And I do think, by the way, we've talked as well about this interesting idea that Bitcoin is correlated with software stocks. But that's going to have to break, because it has to, for the simple reason that AI could potentially kill these businesses. Like, there's no, I'm not predicting it, but I also, on a theoretical level, I don't think anybody could possibly disagree that a super intelligent AI could render these businesses, no longer necessary for the economy. But it doesn't matter. You could 1,000 or million X the intelligence of AI. It cannot replicate it cannot replicate Bitcoin. It's just a completely different social idea. Yeah. It's a network of people that has and based on maths. Now you want to talk about quantum risks, maybe, but AI is not a risk to Bitcoin. And so if AI is going to be destructive to the software sector, it cannot be correlated with Bitcoin forever because it doesn't make any sense. And I think it reminds me a lot of 2022 in the sense of after FTX, people were like, well, crypto's dead. And as it turned out, that wasn't even true. But even if that was going to be true, it certainly wasn't going to be true for Bitcoin. Like Bitcoin will rise from the ashes. It's the phoenix rising from the ashes, just like it's done many, many times before, right? I don't think there's any doubt about that. But, you have to hold these kind of like two ideas in your head, which is Bitcoin will once again rise as it has done many, many times before. And at the same time, objectively speaking, it's the price, it looks like a bear market. The price action it looks like it's going to be ugly for a little while, or at least not like brilliant in the sense of it's unlikely to come roaring back. Like it just bear markets don't tend to go that way. Just history says, we might have already bottomed at 60K, but even if that's true, even if I knew that for certain, I still wouldn't necessarily bet that it's going to like go back up to 120K in the next 3 months. It's like typically you have a consolidation period at the bottom. That's just what we see in bear market periods. At least in pretty much all of Bitcoin's extended history. But then again, that's only 15 years, right? So there's always like everything is like, well, this is how Bitcoin goes until it does something different. And then it's like, oh, and now we've got this new data. So I don't think you can say anything with great certainty. And one of the things that I also want to challenge people on is when you're setting up your portfolio, you have to have two ideas in your head. One is, what do I think is going to happen, right? Like take your views about, and obviously try and be as analytical and logical as you possibly can be and think about where things are going. But then also be really honest enough with yourself to go, but I don't know. Like, how do you position your portfolio, not just based on like what you think is going to happen, but based on the accepting and understanding that there's a distribution of outcomes and it's uncertain and you don't know and you might be wrong. I think that's really important because I think, it's actually a foolish thing to do would be going, like betting all of your chips on one view or another without recognizing the possibility that actually you just might be wrong. And so I think having some respect for that is important. And that's where it comes down to, like, you go back to the fundamentals. Like, that's why it's like stacking sats. It's like, hey, get a job, get an income, spend less than you make, and then take your savings and increase, like, over time, put your savings into Bitcoin proportionately, proportion of your savings every month or whatever frequency you want to do it, and increase your stack, but over a long period of time, taking a long view. And that's where you go, actually, bear market's going to work for me. You're going to long time horizon. But if you're trying to, I think it's going to go down to 53 and then it's going to do this and it's going to do that and it's like on, or you follow too closely on the whole, I better go all in now because March of the mid-year is typically good for Bitcoin. Like, well, maybe it won't be though, and like, right. I would be, if you're going to make big bets like that, at least you better know what you're doing, right? I mean, some people do it, but they're also really good at they're just really experienced. They know how to put in stop losses. They know how to they know how to size their bets properly. Just if you're gonna play with fire, be prepared to get burned. Is all I would say. And so, if you don't want to do that, just respect the uncertainty that markets can present you, and try and position yourself for well, what do I know?
Yeah.
What do I think I know about 10 years time? Because the further out you go, the more confidence you can have. With something like Bitcoin, you can go, well, I don't know what it's going to be in 6 months or 3 months. I don't know what it's going to be, but if I have a really long-term view and I really, really believe that, I can position myself for that.
Yeah.
And I think that's probably the best way to play it.
I want to get your thoughts on this as well. I don't know if you've seen some of these clips. Michael said I recently went on Natalie Brunell's podcast and talked about a few different things. One of the things I thought was interesting was he acknowledged the biggest argument against Bitcoin. It's kind of curious to get your thoughts. I'm hoping that you can hear this. Let me know if you can.
What do you think is the strongest argument against Bitcoin right now, and why do you reject it?
Can you hear that, Thomas?
Yeah, I can. Yeah.
All right.
The strongest argument against Bitcoin right now is it's novel, it's new, and as new, it's not. It's only been around for a number of years, and maybe I want to, before I trust my entire life to it, I want to see it around longer, right? It took 30 years for people to embrace electricity. Bitcoin's been around for 17 years. So someone might very well say, okay, well, did I wait until 17 years after the airplane got invented, right? The airplane is 1903. How many people had flown in a passenger jet or passenger airline by 1920? Maybe it's still early, and I just want to see more people, than me try it out first, and then I'll follow it. So will it take 20 years? Will it take 30 years? Will it take 40 years? The world's full of profound innovations that eventually were embraced by everybody, but it took more than 17 years. And I think the answer is time, right? The early pioneers, it's like, how many years after the automobile was invented before the Model T Ford comes along, and how many years before, after the Model T, before everybody had the car? It's like, there's a natural process of taking innovative technology, building it into a consumer device
So you kind of got the gist of it. So curious if you share his thoughts, if you think that is the biggest threat to Bitcoin. He also he did talk about quantum. If I can find it, I'll pull that clip up. But give me your knee-jerk reaction to that clip.
I think it's a very diplomatic answer. It's a great way. It's a great answer, but it's a little bit of it's like when you're in a job interview and it's like, oh, what's your biggest weakness? And it's like, I think maybe I just work too hard. It's like, sometimes I just get too serious about my work. I think that's my big weakness. No, I respect it because it's a tough position for him to be in when he's this big advocate. He's not going to come out and be like, well, here's this great FUD which you haven't been thinking about, but here's what I'm really thinking about.
Here's a big FUD you haven't been thinking about. That's the best. No, that's hilarious.
So it's not. But with that being said, I probably don't actually agree. I think that the big concern is easily quantum, and unfortunately it's a tricky one because it's not even quantum itself. It's like quantum the idea. See, the thing about it is that nobody understands quantum. Like nobody understands quantum. Maybe there's 20 people in the world that understand quantum, but it's not you, me, or anybody that's investing. And the problem is that it creates this cloud of uncertainty around Bitcoin because The issue isn't, is quantum going to do stuff to damage Bitcoin? The issue is, are people going to be worried about quantum and then avoid investing in Bitcoin because of that? And I think the answer is to that question is yes, because I think we've already seen that. I think mathematically, it's unquestionable. Bitcoin is a harder currency than gold. It just is. You know, people will mine gold now that the gold price has gone up, and we're going to see a massive increase in gold mining. And you know, it has, like, gold as a store of value. It's inflationary. Like literally, there's more gold being dug out of the earth. It's a weaker store of value.
Synthetic gold's being created. That's the exact same as the real gold, I've heard even. Yeah,
potentially, but it's a weaker. On a theoretical level, it's weaker than Bitcoin in terms of Bitcoin is a harder currency. You just there's 21 million cap. It's that simple, and yet, you know what? There's no quantum computers coming to crack gold, and there's an uncertainty cloud around Bitcoin that you just don't know what happens if quantum comes and takes out Satoshi's wallet and they dump 1 million coins in the market and all this kind of stuff. And, you know, is that going to happen? I don't think so, but nobody knows. And then it's like, oh, but that might happen in the future. And it creates this kind of cascading effect where it dissuades people investing in Bitcoin.
Yeah.
And, you know, these kind of narratives, to be fair, only come up really in bear markets. In a bull market, I think people can kind of push that out of their mind a little bit. But at the same time,
it's true.
It's a problem, and it's a very difficult one to face because you can't really prove a negative in the sense of, how do you actually, like, quantum may never be a thing in terms of really affecting Bitcoin, but equally, it might hang over Bitcoin for a long time. And how does Bitcoin prove itself to be like, no, even if quantum happens, it's going to be resilient. And until that happens, and you really can't, like, until there's like Bitcoin becomes so quantum proof that it's like, hey, even if quantum computers come along, they can't actually affect the network or crack any keys in any way possible because everybody has got these quantum safe private keys. Until that happens, nobody can have complete certainty, and that is potentially dissuading other investors. And it has this effect of, you know, would it dissuade me? No, but I'm worried it might dissuade other people. And if I think that means that I think there's going to be less buying pressure, and then maybe the returns will be lower, and then maybe that does dissuade me, and it creates this whole cascading effect on investors. So I do think the quantum problem is the big one without question. So I don't agree with Saylor, but I do actually enjoy his answer. It's a great oh, you know,
I win too much. It's a tough life, man.
Yeah,
stop winning.
It's a very diplomatic answer. I mean, and it's impressive too, because by the looks of him, unless he's a really good actor, I think he thought that up on the spot, which I'm like, you know, bravo for that, because that's a great answer. But also, it's like, it's not really true. But given the dichotomy, he's not necessarily free to say. He's not really free to give the actual bearish take. He you know, from his position, he needs to be. He's a custodian of 700,000 Bitcoin, effectively, not literally, but in terms of MicroStrategy.
He's also spoken about quantum. Like he's mentioned, like he's not worried so much about it. He always cites. He's always like, look, quantum's the problem. Everyone's going to be screwed. That's basically my take on it. It's like, well, that includes Bitcoin. So. That's not
he has, but he hasn't really, to be fair. It's more like, I'm not worried about that. And it's like, okay, do you want to like elaborate on why?
Nope. He does not. He would not like to elaborate, Mr. Thomas. He would like to leave and get an easier answer, I think, easier question.
Yeah. And also, it's tough, man. Like it's hard. We put this on Saylor, like. Yeah. It's like it's not he's just one man, you know. It's not, you know, like, is it really his job to save Bitcoin from
Bitcoin, right?
You know, I think that's too much to ask of him. And so he doesn't have to have a reason.
He does make he's really good at explaining, like, if you're trying to understand Bitcoin and trying to like rank it in terms of, hey, like what assets would I be interested in accumulating long term? Like I'm looking at the S&P, I'm looking at gold, and you're like, does Bitcoin fit in that category? Like he's really good at explaining and getting you to like, okay, this is an asset to be taken seriously because X, Y, Z, not just because the price is up. He goes pretty dang esoteric and deep and like philosophical, but it does help you understand. I think right in the beginning, you get really excited. You're like, oh my God, this is the answer to everything. This is going to cure my cancer. This is going to feed my children. And in reality, it's just an asset that is unique and pretty cool, has no CEO. One of the things for me that's tough is like you mentioned with quantum, if it ends up hacking that Satoshi wallet, that's going to be rough. I mean, there's a lot of Bitcoin sitting in that wallet. And if someone ends up taking it, like they're probably going to dump it. And Bitcoin is so liquid and it's 24/7 that like it'll get sold right there. And I'm not sure what that does, but
it wouldn't be good. And
short term, I agree. Long term, it'd be fine. We'd be like fine when it's over.
Yeah, and I don't even like the funny thing is like I'm not even worried about that happening. I think it's such a low probability event.
You think so?
For starters, yes, because even if you look at who are the, it's not like the technology would be widely proliferated. Even if we did get a quantum computer that had the potential to do that, it would be like Google created it.
All right.
And then it would be like, hey, and if we apply our quantum computer to this problem for, the next 3 months, we might be able to crack Satoshi's keys. But I don't think Google is in the business of, that's theft. You know what I mean? Like, I think even if they could do it, they wouldn't do it. And I don't think that it's a realistic outcome. Like, I'm just not worried about it. But what I am worried about is other people worrying about it. And I do think that is the big problem. Like, you can say you're not concerned about it, but that would be a very foolish position because it's quite objectively true. Other people are concerned about it. And until that issue is addressed, we haven't fixed the problem. It's not about, like I'm thrilled for you, Michael Saylor, if you can come up with like in your head this kind of no, I'm satisfied that Bitcoin is not at risk from quantum computing. But it actually is irrelevant unless everybody feels that way.
Of course.
And so yeah, anyway, but that's like it's a bear market. It's easy to come up with. Yeah. It's easy to come up with.
It doesn't feel like a bear market, strangely. Like we are definitely in one, but it doesn't feel like, I guess because it's just like, for me, I guess in bear markets, a lot of people will super slow down. And so like, oh, what is there also to talk about? I'm sitting here going, dude, there's a million things going on. Because we've moved out of just Bitcoin and crypto. We're talking about the equities, the indices are involved, the gold and silver have run. So like, to me, there's a lot of stuff going on. So I'm kind of like, I forgot Bitcoin's in a bear market. I just look at the price. So I'm like, I guess we're 50% down, but like, these things happen. This is Bitcoin kind of thing.
Yeah. Well, it's a bear market for Bitcoin. It's not a bear market for the world. I mean, stocks are at all-time highs.
We'll see. Some of those stocks got people feeling a little uneasy.
It's a bear market for software stocks, that's for sure. It's like that line, right? It's always a bull market somewhere, and there's always a bear market somewhere.
Exactly. There's a bear market somewhere. That money's going somewhere. That's hilarious.
Yeah.
Thank you.
Look, anyway, man, that's probably all I got. But how are you feeling? Was there anything else you wanted to chat about today?
Honestly, those are the main stories. I mean, from what I'm seeing, everyone's been talking about Jane Street. That's the main thing. It's kind of like, it got lined up right with this relief rally. It got lined up right with Zach XBT, who's going to be coming out with some crazy story tomorrow. Do you know this about this? He's apparently going to be basically bringing down some company who's been doing a bunch of fraudulent activity. People have been betting that maybe it's Meteora who's behind the Trump and Melania token. And then Melania releases a movie today. Like, a bunch of weird stuff's happening right now. People are saying it might be Pump Fund. They think it might be Gemini. And there was an announcement like a month ago, like the CTO, the COO, and like 2 other C-suite all left the same day, like a month ago. There's basically like 6 or 7 companies that people are a bit nervous about. Obviously, Jane Street comes out, and so basically a bunch of stuff is kind of riding on tomorrow and Friday. And so honestly, that's really it. Like, I guess we'll next week we'll be able to touch on like what happened, and then we'll also have a few days of being able to observe price action to see if that made an impact or if price really just led. And it's kind of one of those things in there. It just follows the price. A lot of times, especially in my trading spaces, the analysts are like, "Look, we knew something was happening. We couldn't tell you what it was going to be, but the chart was ready for this. We've been waiting for a relief rally for 2-3 days now. Now we got it. We're into resistance now. We're likely going to see something that pushes us down a little bit. Maybe that's the news, and then we see a drop down." So I don't know. I mean, I'm not as worried about it. Like if you're trading these markets and you got these ranges for Bitcoin, you're loving life because you're just playing the ranges. I mean, if you're good, at least you're playing the ranges. If you're not, say you're just accumulating and you've been wanting to get Bitcoin forever and it was at 120K, you're barely able to snipe any Bitcoin at that level. Good news, you're 50% of the way down. You can get a lot more Bitcoin now at that price. You're way happier stacking here. It just feels worse because you're like, wow, what if it goes to 40? What if it goes to 30? I'm like, brother, our side's going to have to be 0 for us to go that low, but it could happen. But if that does happen, just make sure you have a job, make sure you have income because you're going to want to scoop up these dips. It's the same with the stock market. Like there are massive opportunities to get back into some of your favorite assets, but you got to be willing to snipe those entries when they're there. You got to have, in my opinion, you should have some type of plan. If you're someone who's buying those assets up, you should have a couple levels that you're paying attention to. And if they drop down, like you hopefully have a job and you've got that capital to capitalize on it. If you're someone who's in business and you want to invest in yourself, the markets are relatively irrelevant to you, then that's where you invest. But there's a bull market somewhere. Like there's a place to accumulate somewhere. There's a bear market somewhere to capitalize on, pretty much in every single market. And so I just, for people who watch these streams, the goal is for you guys to feel empowered and to make sure you're on your shit and you're doing your thing. If you're staying researched up or if you're trying to trade these markets, like whatever that thing is that you're choosing to set up your future for, hopefully you're just investing in something. It doesn't have to be assets, could be yourself, could be whatever it is. But like that's really the goal of these streams. And I think the people who watch these, that is probably that exact bucket they fall into. And so honestly, the goal of these is just to keep people informed what's going on, to chat a little bit, to keep up to date with the markets. I'm glad I am because if there was no streams and daily spaces, dude, I'd have no idea. I'd be like, dude, I read this thing and then Tom Lee said that and then Kathy Wood said this thing and we seem to be going up forever, Laura, and like everything's down, but then gold pump, like I don't know what's going on. So like for me, I'm just chilling. I like seeing all these things happen. I know the markets just do their thing. Like you watch like a chart like gold over the course of hundreds of years, and there's all sorts of ups and downs. And in those ups and downs were all these stories like, oh my God, did you hear what happened last week? And that was like 30 years ago. And like none of it mattered. Like prices has done what it's going to always do. And for certain assets, if they're paired up against the dollar, it's pretty much going to be up and to the right, pretty much endlessly unless something changes. So that's really all I got as well. So yeah, man. By the way, for people who are watching this stream, if you enjoyed it, definitely be sure you're following Thomas. If you like keep up to date with Bitcoin stuff, Bitcoin analysis, ETF stuff as well, check out his page. Got a great website that keeps track of all the information you need to get. And definitely repost the stream if you enjoyed it. And if you're watching on X, definitely be sure to follow here at Wolf. We put a ton of content out there trying to keep you informed with everything that's going on. If you're on YouTube, definitely subscribe. If you're on the ETF tracker, if you're on Wolf Bitcoin, definitely subscribe. Got a lot of content coming out. Otherwise, Thomas, any final thoughts before we sign off?
Also I'll just say shout out if you're watching the stream, send us a DM. We'll be like just say hello. And then also like if you've got any ideas about stuff you want to hear us talk about, let us know as well. Appreciate it. Yeah, absolutely. Appreciate you. We had a couple guys in the chat who were chatting a little bit with us back and forth. Appreciate you. See you guys all in the next stream. Until then, we'll be back on Space.